All right, welcome back. Gonna try and make it a quick one today, but got a lot of stuff to cover. So hopefully this is helpful. Kind of an update on the positions. If you don't know who I am, Ben Collins, CFA charter holder, Chief Investment Officer of Options Autopilot, which is an automated options trading platform. And as an example and a reminder, this is for educational purposes only. Don't follow what I'm doing, but I am attempting to pay my rent, which is $3,015 a month, strictly with automated options, using approximately $30,000. Again, I don't recommend that. This is just part of my capital, just as an example here. But I also want to go over update on some directional positions, some things I've taken off that I'll look to do in the future. So kind of want to dive right in. And we can kind of start out with the automations because we've kind of seen the market whipsawing a little bit around here in the recent days. So if we go to MES, we might have to pull up the SPX. Kind of looked like a breakdown, right, when we first kind of talked about this. I mean, this was definitely looking pretty toppy. It still kind of seems toppy, but this was sort of a fake out in my opinion. Kind of looked like it was going to break down below this level, but it did not. So I'd say it's technically still okay. Let's look at the SPX just for fun. Not that it's going to be any different, but yeah. So we can kind of see that it recovered here, and if it breaks to a new high, then it's hard to argue that the path of least resistance is probably higher, and the market is telling us that it wants to continue on. So maybe we're climbing the wall of worry, or the market is differentiating between fundamentals of smaller cap companies rather than just Mag 7. But some of them are still participating. I mean, Google's still ripping, so that is still helping the market. But in general, we were basically kind of down, and I pointed this out where I think I was. So as a reminder, this is a hedge. I just have a long-term put spread on, and I just did that to try and dampen my short Vega volatility. You could see how short I am on MES. So I kind of wanted to counter it with a little more long Vega on ES. You can see my deltas are actually fairly different. But so as an example, when we were getting those sell-offs, this was gaining value and was profitable, and you can actually see that it's still profitable. And then these were actually gaining deltas because it was going against me. So I was losing money on my automations. None of them got to the point of closing out at a stop loss. Like I mentioned before, this is literally the longest I think I've ever seen any of these trades be open. See, 50 days. That's the longest that I've experienced since running this, and we started beta testing May of 2024. So interesting timeline and time frame at the moment that the experience has been that all these are kind of staying on and are not hitting a profit or a loss target. Again, we have a parameter on there that it will close 15 days before expiration if neither of those are hit. A lot of them are pretty close at this point because the market's kind of rebounded. But I just want to kind of show. I think I was showing at that point that I was still up about $1,100 between the hedge and the automations. I think I was actually up mostly on the hedge at that point. It was like $1,000, and then maybe I was flat on the automations. But the automations kept running, kept going on, which is kind of the whole point, right? Like this is here to hedge a quick drawdown, and then obviously we're still selling volatility, selling the 1-on-1 or doing the 1-on-1 strategy as the market is falling. So this is why it kind of can work out in our favor because we've got our hedge protecting us here, and obviously as I have an automation going on every day but Wednesday at this point, so pretty much it's just doing the 1-on-1 like this. Technically it's farther down below the market, but you get the point. It's basically just constantly doing this while our hedge should be countering some of our loss, and then we have time decay in our favor. Theta is positive, so if we look at this, you can see my theta has actually gone up. My negative theta on my put position, my hedge used to be like $1 at some point, but you can see I'm theoretically making $113 a day from theta decay on my 1-on-1 strategy. So let's say you, again, I'm not suggesting this, but let's say you wanted to theoretically replace your job, figure out what you make on a daily basis, and then back into what theta you want. But again, you have to be very aware of Vega, so being short Vega. So if the VIX goes up, this number, VIX is at 17. If this goes up even $1, 1% basically, I could be losing $550. So when you get these large spikes in VIX, like we've had, that is where you can get into trouble. So this is where you need to be very careful. And I don't think most people point that out enough. So it seems all well and good right now. Obviously, I didn't hit my rent goal last month with the automations, but you can see P&L year to date up 1588, midway through February. So we basically treaded water all of January. So that's obviously the dilemma on doing this with limited capital and trying to do it all with MES basically. But I just wanted to show this as an example. So that's where we're at. We're actually positive on the hedge. That's positive, I guess, figuratively and literally. Not always going to be the case. We kind of always expect to lose money on hedges. They're there to hedge, obviously, right? And protect us or help protect us and soften the blow on a downdraft or drawdown in the market. I mean, in my opinion, it's kind of anyone's guess. Obviously, again, this is why, selling options on a daily basis, when we're not doing 0DTE, we actually are building that out right now. That's why I have VIX positions on. These are part of our kind of beta testing for 0DTE, just in terms of how things settle. I'm just buying straddles. Again, kind of also a hedge because I'm already so short volatility with MES. I kind of am just buying long straddles. So if for some reason we got a huge spike to 50, not that I would make a ton of money, but it would help soften the blow on some of the other positions. And again, the hedge should soften that as well. But yeah, just back to the VIX and kind of educationally, I'm sure people are tired of hearing this. But so again, the advantage of doing it on a regular basis is we're kind of getting a dollar cost average of volatility or levels, right? So it's like, instead of trying to time it, we're just doing it regardless of where volatility is. So we should be benefiting when volatility is high, and then it does mean revert. So we're adding in some filters to have VIX as a signal. So if you like that, definitely subscribe, follow along, and obviously if you want to try Options Autopilot, we've got a $45 trial for a month in the description. You can find out more at our site. But yeah, we're adding a bunch of cool features and things that I want to have, and Zach and I have wanted to put on there for a while, and should be helpful long term, because it's basically like doing what you should do regardless of paying attention to it, right? We're taking away the emotional aspect, because we know that options should statistically make money over time if you are disciplined and manage your risk, and that's what the whole point of the platform is helping you be disciplined, whether you're there or not. So let's go through Intel. Intel looked like it was going to break out, then again kind of had a fake out. It's still hanging in there. I had basically cut my position in half when it broke down here. Wait, I think it was, take that back, because yeah, I hedged myself incorrectly over earnings. Earnings happened. I pulled off my hedge, and then I ended up adding, and then I think I took it back off when it broke back down here. Again, I was being too active. I don't need to do this, but I was kind of just trying to manage my long position because the market was getting a little bit unstable. So I just wanted to kind of reduce my risk and cut it back down. And then once it closed back above 50, I added another 2 contracts on. So I was at 10, dropped to 5, and now I'm back at 7. I'm just kind of waiting. I think I'm going to wait till if it makes a new high, then I will add more above 10 contracts on that position. And again, that's just how I'm doing it at the moment. You can see that I'm not in SOFI, I'm not in RIVN, although I kind of want to get back into SOFI. I cut my position, I think finally like right here, because it hit my 60% stop loss that I have. Again, this was mentally on a long position. I could have done it mechanically, but I did follow my rule. When it hit 60%, I cut it. and I had already, I think, cut part of it previously. So I basically am out of it at the moment. I think that the downside target, again, if you're following technicals, um, I do think it's a little concerning just because this was such a significant level for it to break out from. Because if you look at the historical, this was like a pretty big number uh, for it to make a new high. So the fact that it's breaking back down from that, a little concerning. But again, I do think the company is doing good things long term. So what I might end up doing is I might sell some puts and then buy calls to express my position. Again, it's a little more convex. Um, and if I get assigned the stock, then that's fine. I would probably be selling 18 strike or maybe a 15 strike farther out, um, because I do think the support's going to be in this area. And I think people will find value in that area. Obviously, if I really wanted to think there's some value, it's probably right around, yeah, right around 15 level. So that's probably how I'll approach it. I might add in basically what we'd want to see is it to break back above this level close. Then I might add a little position here, wait to see if that confirms and then add. But again, it's all about incremental risk management and not, swinging for the fences. I know YOLO was so popular during COVID, but it's just not a good way to go long term. From my experience, you just want to be measured and always manage your risk. So RIVN, I haven't even looked at it recently. It did break down pretty okay, and then it popped back. I don't know what the news was on it rallying so hard right here, just that it got kind of oversold. If you recall, I cut it when it broke this trend line. I cut it here. So it's fallen pretty significantly from there, but now it's kind of rebounded. And this was the level I was kind of wanting it to get to look at maybe selling some puts. Again, kind of similar stuff. It's not rocket science. Again, it's just risk management. The tough thing is being disciplined to do that in the long term. So I kind of wanted to hit this level to really kind of take a peek at it again, but it probably won't get there. I do still think there's headwinds there. The R2 coming out is a pretty big deal for them, and I don't really think they have a benefit of AI and automation. Sure, they have autopilot that you can subscribe to, but we will see. They do have good products from everyone that I've known or heard that's had one has really liked their truck and their R1S. So I'm assuming it'll be good reviews for the other stuff, for the R2, and then I think they have a little hatch, but we'll see what happens. That's probably a longer term play in general. And those have been some of the names that I've been in and out of so far. Not that I have any insights into them, those are just kind of how I'm trading them. It's all just technical and managing my risk. So Chipotle, do wish I would have maybe tried to put a position on when it was here, and then that looks like a bottom to me. Now it's filled the gap. We'll see what happens from here. Again, I do think they're doing a good job with their marketing and the protein and all that type of stuff. It's crazy how much protein is getting marketed these days, but they've always had pretty good food, I think, for the price. So I might do something there, but I haven't done anything yet. I think Reddit is, I don't know enough fundamentals on it at the moment. I think that it's probably one of those underappreciated stocks for both AI and advertising. They have historically not allowed options autopilot to advertise, which, not that I've ever talked about this, but I think it's kind of BS because we're actually trying to help people make money. But all they do is let people, pitch stuff on Wall Street bets, and they didn't want people to be able to market quote unquote bots. And I was like, well, we're not a bot. We're literally just letting the people schedule their own stuff and automate their own stuff. We're not selling you some Forex trading bot. But I get their concern, but it's hypocritical in my opinion that they're doing that because they literally let crazy stuff go on in Wall Street bets. And now they're going to be selling that sentiment information for trading signals, right? So it's like, I'm sure they'll find a way to monetize that. They'll probably find another way to monetize their users for AI if they're not already. I don't know if they'll allow, someone actually just emailed me today, but from Reddit about advertising options autopilot again, but they've done that before, and maybe it's been an error because they forgot that I'm labeled as a bot. But my opinion, they're preventing people from learning about actual helpful tools, and they're just trying to keep people, I don't know, gambling, which is unfortunate. And I disagree with. I agree with people being able to do whatever they want with their own money, but I think they're doing people a disservice on Reddit, and kind of leaving it more of a gambling when it could be. It's definitely gotten more educated, during COVID. But yeah, either way, that's kind of a aside. But I do think that they have some good earnings potential for advertisement. Um, and I'll have to look in the fundamentals a little bit more. Technically, doesn't look very good, uh, I would say. So it almost looks like this is topped out. And if you kind of, again, follow some technical analysis, theoretically, it's going to extend as much as this pattern, which would maybe be considered a double top. It's a little bit sketchy. I wouldn't say this is like totally well defined, but it could definitely fall into this range. So it's got some further distance to go possibly, but again, just start out small and then add if it gets up, and if it never actually gets profitable, then you've only risked a little bit. Again, I'm not telling people to do that. That's just how I'm going to approach it. So interestingly enough, we've been talking about this strategy. Finally got into this level again, drew this a while ago. And so it looks like it's kind of a area of value for investors in general. So if we compare this to Bitcoin, obviously Bitcoin has been getting kind of hit as well. That chart's not looking great, but I don't know. Not a bad. If you're a long-term Bitcoin bull, it would probably be decent at dollar cost average. I had turned off my automated put credit spread up here, and that was, or maybe it was here. That was kind of luck, and I just kind of thought it might be breaking down. So I just wanted to isolate what strategies I was doing, and keep it to the S&P. So this has been kind of interesting to watch because it hasn't been a flight to safety or a store of value recently. Again, I'm not a Bitcoin bull or a Bitcoin hater. I see the value, I can see the use, I guess, but it just depends on if that use continues. What I don't know, and if people know in the comments, you can let me know. I think if you fall below the cost of like mining, I mean, unless you're a bigger company who's just trying to, accumulate Bitcoin over time and you can operate at a loss, then that's fine. But if you get a bunch of people pulling back, and then not really mining Bitcoin, does that cause any kind of lack of demand? Because now it doesn't really make sense for people to be mining and accumulating. And I wonder if that removes compute power, removes power consumption, and all these plays that are both related to AI and cryptocurrencies, which again could cause a bigger problem with all these companies that are kind of relying on CapEx spending related to AI. Again, total speculation. Smarter people already know this, and the market probably is already somewhat aware, but sometimes the news can come out of nowhere, or maybe it seems like it does, and that's the new thing to scare people. Again, long term, I think it'd be fine to accumulate Bitcoin. I might be selling just cash secured puts on it and start to actually just hold the ETF. But in general, or maybe I'd do risk reversals on an automated basis. But I am still out of it at the moment. And obviously the chart doesn't look great. I don't know where they're getting the $38,000 target. Again, if Michael Saylor gets forced to sell and you get some of these bad headlines, sure, you can get it pushed down. But that seems kind of crazy to me at this point. So we'll see what happens long term with that. I think that, again, if we go to year to date, just as the update, $5,500 basically, with, okay, some of that coming about $1,800 I take that back, almost $1,700 coming from automated MES one-on-ones. Obviously, that's kind of what we're doing for the income side. This is the hedge for ES. Um, obviously, RIVN contributing a decent amount, but then taking losses on, or sorry, Intel contributing a decent amount. Oh, I haven't talked about Intel yet. I did. I was going to say I was back to break even and slightly up, and that's when I had added, and then I had to take it back off. But so that's the bigger winner directionally. But you can kind of see these obviously took some losses. The VIX, the first VIX straddle I did made money because it kind of did spike. But again, this is just for zero DTE purposes and testing because we're looking to basically do that. We have it programmed. It's just a matter of I'm just beta testing this thoroughly for zero DT. Again, I'm not a huge zero DT fan. I think you get the benefit by doing what I'm doing in terms of putting on a longer term position on a day-to-day basis, and then that just rolls off over time. I think it's a smarter, more risk managed way to do this in general. So I think we're going to try and add some more, I wouldn't say proprietary strategies, but they're different strategies that'll have a little more logic, and I would say I haven't seen them other places at all, and it'll maybe be more approachable for people in general. So there are hedge funds doing things that they're charging crazy amounts of money for that we can automate pretty easily. So we will see what happens on that side of things, but I'm pretty sure that's it. I guess we can quickly look at gold. I haven't been in gold trade for a long time, gold futures. So it's just ripped. Obviously, again, had one of those big sell-offs. Still in the uptrend, so I guess you could stick with it as it is for now. Let's check out oil. I think it's been rebounding a little bit. Yeah, a lot of it. So yeah, pretty big rip from 54 up to 64. I'm not doing anything with oil. I have in the past. I'm just keeping it simple with S&P for the most part on the automations right now. We'll see. Maybe I'll add gold and oil back into the mix because again, I do like the uncorrelated or hopefully less correlated asset classes. And then let's look at bonds. I mean, they've been breaking down for the most part, or at least I guess kind of holding around here. It would have been good to maybe be doing the 1-1-1 for this period, but definitely a little bit of volatility in the bonds in general, and it kind of, I wonder what TLT is doing because it almost seems like rates want to go higher, but you just never know. I mean, definitely broke this uptrend line that I had. Doesn't mean that it means anything, but yeah, I'm kind of surprised that rates haven't come down more, but it's the market telling you that kind of disagrees, or it could be that China's selling our debt, people are selling our debt, and there's a little concern around that. But either way, they're kind of just holding steady at this point, and I'm not doing anything with it at the moment. At some point, I'll probably add them all back in to doing, gold, Bitcoin, oil, and bonds in addition to the S&P 500, because that's kind of what I was doing last year for the most part. And I will do that again in the future, but right now I'm just sitting out. Just wanted to kind of show one asset class, one index, and how that gets tracked and how that goes for the purposes of rent payment, just as an example. So hope you guys appreciate that, and let me know if you have questions. Feel free to leave anything in the comments, and like, subscribe, and share it with somebody if they would appreciate and learn something from it. Talk to you guys later. Keep managing your risk.